Okay, okay, dokie. So, hello, good morning, everyone. This is DP Z. So, to do change from microphone headset to all right. Check with my mic. Yeah, it's 7. Like this will only be an hour. Just opening up my trades. Okay. So, today, guys, I've already opened. I'm trying to show to you how to open up an Iron Condor in Robinhood. So Iron Condor is a level 3 options trading in Robinhood. I know level 2, level 3, but it looks like level 3 for me. It means to say that you have to pass a certain assessment from Robinhood so that you can actually get to trade using spread. It's called spread trading. Okay. So it's not spread trading is not for everyone. Most of the time, you can only do one leg or two legs, but more than two legs of options trading or spread trading, then you might need to take assessment with the Robinhood. I'm using a Robinhood right now as my broker. So let's get started, guys. Out of 49,000 that uh, I'm going to trade only like about a 1,000 for today and expose only 1,000 for today, and eventually uh, like 30 to 50% of that 1,000 will be exposed for the trading today. And for the time frame, I'm using two, um, 0 DTE and 9 DTE, or 9 days to expire. So here it is right now. I have two open and two pending orders, as you can see, for Iron Condor. Well, 7445 for 720 is already in the money. That's not good. That's not good. Actually, this one is not good because it's already in the money. That means to say I am currently losing. Not a good one. $54. Okay. But that's not the end of everything. So this trade will end only at the end of the day, which is for Pacific time would be 1:30 to 2 o'clock. All right. So we are actually in the money today. So in the money is not a good thing, meaning to say my trade could be executed once the trade will expire for the Iron Eagle. So let us look at the analyzer. So I am hoping that the price of SPY or S&P 500 would go in between my Iron Condor of um, 745 and 751. And right now the price is 744, which is already out, or actually it's called in the money. So between the range, if you check this one right now, let me just move my screen, my face here, guys. um my SPY is 745, my limits, my strike is 745 and 751. So meaning to say, if the price of SPY ranges between 745 and 751, I'm actually um, out of the money, or at the money, meaning to say I can make credits for that one. And the credit that I'll be making is the maximum one could be um, from, let's see, I could make around 43 trades. Why did it? Right now, the theta is not with me, so I could possibly make um 75 maximum. and my maximum loss is also is $225. So that is my risk reward ratio is 75 to 225. That's ballpark 1:3, close to. Okay. So right now I am negative 65, as you can see, 62.99. Sometimes I lose, sometimes I win, but how I make it, oh, I'll show you. With my XXP right now, XSP, it's also an S&P 500. I am making $2, but the DTE, or the expiration for this, is 9 days expiration, meaning to say I still have a lot of days to adjust my trade. But my SPY is zero DTE. I'm just testing for the zero DTE right now. It could be more than, I mean, I could have more than uh one DTE or zero DTE. I could make it like 10, or you could make it like a month ahead, or you could make it like 6 months, or either 1 year. But right now, the strategy I'm employing is called the Iron Condor. So let me show you what an Iron Condor is, and let me trade. Let me make some trade for 9 days. Okay, since I already have one, well, I can do 1 day, one DTE. Let's try to open one. Let's see. It's already in the money, but it's okay. It fluctuates every now and then. Let's trade. Let's view all the positions. These are the position, and the price right now is 745. This is really close. If you can see -3 and negative +3 right over here, they are pretty close, and the price ranges from 745, and we are hoping that the price remains that way between um between 745 and 744. I'm hoping that way. Well, actually not. Let me see. That's my position, 745 to 751. I am hoping that the price range is between that one. So at 745, it's already out of the money, meaning to say I am already making credits or premium, or shall we say it, I'm already getting paid. At 745, 746, up to 751, I am already getting paid for that one. So at the end of the day, which is 2 p.m. today, so I have to wake up like 6:30 to start my trade for my daily trades. At 2 p.m. today, Pacific time, I'm in California right now. Um, if the price of SPY is in between 745 and 751, then I am making good money. It's just like renting out my stocks of SPY right now. So that's my position, and I'm actually making 40 cents right now. As you can see, that 42, it moves every now and then, and that's for my SPY. And let us try to look at my XSP. It's also like my XSP right now is trading between 733 and 761. So if the price of XSP, which also an S&P 500, will it be in between for 9 days between 732, and 761, then I am making about $75 for that one. And I can close it as early as I wanted to by just simply putting in my limit sell. I can actually close it, or if I hit like 20%, then I can sell it. Like, say for example, for this one right over here at XSP, I'm already making $4. I'll just put it in right now, but already in the, I'm already making $4 for this one at 2.7%. So my target is only 20%. So if I make 20%, that trade, this position will automatically close. And this is called an Iron Condor. And again, let's make a trade. Let's make a position of a zero DTE, another zero DTE. Ooh, I this is um yeah, zero DTE is very tricky because you have to close it before a 10 today. 10, like say if you put the trade at 6:30 or 7, like 30 minutes from the market opening, because the market opens at 6:30 in Pacific time, and that's New York, that's about like 8:30. You make sure you close your trade about within the first, if you're already making money, be sure to close it um, from the range of 1 to 3 hours. I mean, that's my strategy, guys. I mean, I don't want to be hit by a gamma. Gamma is the gamma burst. We call it the gamma burst. Say for example, at um say SPY. SPY is like 7:45 and 7:51. Now I am already in negative 42. See, that's what happened. Because that was because of the gamma burst. So if you look at in here, if you look at the analyzer, my gamma is already -6. We have to make sure that the gamma is getting small and theta is getting small. Like theta for options trading is like an ice. Like the more it goes down and the more it goes up. I mean, negative side. Then try to observe when the theta goes down 117 right now, 119. You can also see the price of my profit. I call it profit. Is also fluctuating. So when theta goes down, and I'm hoping that theta will go um, lower somewhere in an hour or two because this is zero DTE. A lot of people would, I mean, some people would understand what a zero DTE is. It means to say that I'm only trading for the day, and the 9 DT is like I'm trading it for the 9 days, and the expiration is 9 days. So right now, theta is going down at 114. So my loss, I mean, initially you will get a loss. That's probably the case. That's what happened. And my gamma is also getting yeah, down. Delta 24. Delta is when you start opening it. But I'll show you. I'll demonstrate to you what how delta would work. Okay. Um, Now let's start. Let's make a trade of XSP, a zero DT XXP. So let's try XSP because I have credits for that one. And let's view all options and let's go for what is what's a zero. Today is 20 today. Let's put it today. And on today, let's put a sell put position for that one because we're trying to make an iron condor, guys. So I'm looking at 80% chance of making profit. You see that? That's yeah, 80%. You can also do only two legs, but the the thing with two legs, it's way too risky because you're exposing so much of your uh portfolio. I mean, not portfolio, but you're exposing so much, like as opposed to like four legs, which is the Iron Condor has four legs. So now it's no brainer. 83% is a good spot. It's a sweet spot. So I'll put a sell put position at sell. I'll click that. There you go. And then I'll put a buy put on that one. One lower. I mean, some people could do two lower, but I'll do one lower. That's all I'll do. And then I'll do a call position, meaning to say, sell call. It's like a covered call. Again, I'm looking at a 90% chance of profit. That's a good thing. Or about 85. So I'll put sell call here, and then I'll put a buy call in here. Then let's hit in. Okay, let's hit in. There's a continue at the bottom. Actually, it shows continue. So now I have four legs and then click continue. And then it shows me just, I'm going to expose for the sake of this video, guys. One for the XXP at 74. And the maximum loss that I'm going to get is $74. And the maximum profit is only 26. That's how. 1:3 ratio. Review and then swipe to submit. And then order receive and wait. The quantity is 1 of 1, meaning to say it was already taken, and that's good. All right. All right. Now, after that one, I already have that position. See, where was that? 720 and Condor. Um, this one. This is the one. Let's click that so that I can put a my average credit is 26 cents, meaning to say 26 cents is it's up to $1. So I would make a credit of 26 cents. And for me, 80% or 20% of 26 is already good enough for me to close my trade. So 26, 80%, somewhere like point 0.2. So let me do that, and let me trade that one close at 0.2 and 1. I have one contract available. Review it and click to submit. Now I have the position. So that's done. I'll click done. And now I have, if you go back in here, I have another pending order at zero point 0.2 strike limit. I mean, strike a limit at zero point 0.2 cents limit. And one contract is 100 shares. So zero point 0.2 times 100, and that's about what, $20? Am I right? I mean, I don't know. Yeah. So these are my positions already. I have one, two, three. I have XSP, two XSP, two for the Iron Condors, one Iron Condor with 729, and now I'm going to do um SPY for 9 days. SPY for 9 days. Let's try SPY or yes, and let's trade view our options. What is 9 days? That's 20 today. That's about July 29. Yeah, July 29. Let's click in sell put and let's go to 80%. See, where's the 80%? Right here in the middle. You see that? Like at 742, I have 69% chance of making a profit, 71%. So let's always hit like 20%. So I mean, sorry, 80% chance of making profit, or 80% or 20% chance of making you in the money. Okay, in the money means you are kind of like losing on that side. I mean, you are not making any credits for that one. We actually want credit here. That's what we want for the trade. We're not actually like making or buy and selling stocks, but you're only actually like making credits and making money off the credits while you perform all those trades. So you're getting paid of making the performance. It's not actually making trade, making money out of the trade. You're not doing covered calls. You're not doing bull put spread. When I say bull put spread, you're doing a cash CSP, or called cash secured put, but instead I'm doing a which is I'm comfortable of doing, is called the Iron Condor. So search for that one, guys. Look for what an Iron Condor is, and you can actually do Iron Condors in a Robinhood. So right now, let me start at I have here 80%. I like 81 better than 80. So 730, I'll put a, sell put for that one, and then I'll put a buy for 729, and then I call, sell call, just tap at the top. At sell call, where's the price? Let me click the price, and we will hit 80% or higher, 78, 75, 77, 78, 80, 82% is, I love 82%. So sell call at 82%, which is 757. That's my hour higher range. And then I'll put a buy position for that one to counter it, just to make sure you are not open to maximum drawdown. If you lose, your losses are defined as well as your profits. So let's do that and let's continue. And it says, look at that one. It's an SPY Iron Condor 729. Let me just put one contract for that one. Limit price of 0.41. Let's review. And then click submit. Ping. Let's wait. So if this is if it is consummated, oh okay, somebody took it. Somebody bought my contract for that one at 40 cents. That is the meaning of that one. So it what does it mean for this one contract? I'll be making $39 for estimated total credit. Okay, that's my credit. I'll be making that credit if within 9 days. But you can always close it as early as you want. Like say for example, I don't want I can't wait. Once it hit 20%, then it will automatically close. So 100% is 39. So 20% of that one is I say my comfort zone of making that money. So what's 20% of 40? And let's just do some calculator, guys. Calculator. Um, okay, that's 4.4. So let's just do the calculator really quick. So zero point 0.4 times, you know what? 75% is also good, but 80%, that would be like 0.30. So zero point 0.3, I'm I'll make money at zero point 0.3. So 0.3%. 0.3 now, zero point 0.3 cents. So let's look for that one. Where the This is where did I open it? It's 9 days Iron Condor 720 729. X was it? Wait, it was SPY. This is the one. A little bit confusing. You have to look for that like manual. It's not automatic, guys. So here it is. As you can see, 730 757. That's the range. My strike price of 730 and 757. So what I'm gonna do is just click that one. Okay, as easy as ABC. Okay, click the word. There's a word trade here, individual, whatever. So you can actually list. My face is blocking it, but new. Yeah, let's just put it that way. Let's just put that one. Let's just put my face that way. Yay! Okay, trade and then close and then one position. We have one available contract. If you read it, I have one available contract available because I only made one trade. And let me put the profit at point. How much was that? I forgot. Point 0.3, 0.3, which is already like the 20% of, or the 80% of point 0.4. So it means to say if it's 30, if it hits 30 dollars, then it's automatically closed. It cost only like $30. So I actually have a credit of 40 and I will end up only like paying 30. So what's the net? 10. Oh, $10. Oh, you can be greedy, guys. You don't be greedy. And swipe to submit. Swipe it. And there you go. And okay, that's done. And now I have four positions. Positions held like 1, 2, 3, 4. Everything is Iron Condor. So I have, oh, wait a second. I have two Iron Condors, 733. Oh, yes, two Iron Condors. Two 4XSP. Those are my positions right now, right? And I'm hoping I'll make some, credits today. So what you're actually doing is you are not getting profit from from the trade itself. Okay, from the intrinsic value, from the not intrinsic. The intrinsic value is the value of the credit you are actually making. Meaning to say, you as you as the trade matures. Should I call it the word? Should I don't know if the word mature is the right way to say it, but it's age. It's almost the same thing, right? As it age, you are also experiencing good theta. I mean, either way, you can't always say you have 80% chance of getting a good theta and 20% chance of not getting a good theta. So theta here is your friend. Just FYI for spread trading. This is spread trading, guys. So basic for those who have you can actually do spread trading with the Iron Condor. This is what I'm actually showing is really basic, the basics of the Iron Condor spread trading. So unfortunately, unfortunately, not everyone can actually do Iron Condor. Okay, there's only a few people who can actually do, but you can, everybody can do it as long as you pass the test. And the problem with that is that if you fail the first test, you will wait you will wait for a year to get to pass the Iron Condor. It's tough, it's crazy, but again, I say Iron Condor trading is rewarding, but for the meantime, if you're actually trading, guys, you want to practice around, you start with a single or two leg trading, like two legs. And what are those? That it can actually show you. Say, for example, the same thing as SPY. We go to trade and you go for options trading. You can actually see here, there's on the top, there's like, let me just put this down. Okay. There's builder today. There's builder there today. You start with for the beginners. You can start with builder. You can pick covered call, secured put. This is very common. These two are very common for the bullish market. If you think the stock is bullish, you can actually do long call. You can do cash secured put. Long call is when you are already assigned with a stock and you already own it. You can sell it at a crazy price so that it would not happen. And at the end of the day, you are getting paid for doing that crazy stuff. What crazy stuff was that? Putting an exorbitant price of your stock or share to sell it at a future date. So, say for example, the price of a donut is $5 and you want to sell it for $10. That's a crazy price, right? It's the common market says $5, but you are selling it or long call, covered call, you're selling it for not $10. And that way nobody would put it, nobody would buy it. And that is your intention. So that no one would buy it. But by doing so, you're just putting that contract in the air in the market so that you would earn credit. So it's not actually you are trying to sell it, you're actually just making a a an action for that one so that the market would become more volatile. Can you imagine that one? You are one of the factor, crazy factor that the price of the stock goes up and down because you're putting up a contract up there. Like the donut, you're selling donut. The donut normally the market's like $5, but you're selling it for $10. Do you get my drift? That's how it is. You're trying to sell it. All right, live trading. What happened? Oop, oop. Oh, there you go. You're trying to sell it, but you don't have an intention of selling it or executing it. That is called long call, covered call. Okay. And the second one is called, and if you don't have the stocks yet, you can actually put a cash secured put. Cash secured put is the opposite of the covered call. You are intending to buy something that you don't want to own. I know sounds crazy, but that's how it is. Say the current price of donut is $5, say, or $5. You are putting up a contract in the air, in the market, sorry, not in the air, in the market, that you are willing to buy 100 shares of donut, 100 donuts for a price of $1. Isn't that crazy? It's crazy. Nobody would sell to you $1. Somebody would probably. That would be crazy enough. So that's like shorting it. You're shorting it to the price that is ludicrous. Ludicrous price. That's what cash secured put is, and you don't have an intention to buy it, you don't have in any way an intention to own the donut for the $2. You're just putting it in the market so that you can make what credit out of that one. That's how it is. Making credit, making money. It's just like you buy a house, you're just putting it on the Airbnb. This is the Airbnb of trading. It's called spread trade, and this is single leg, like long call, cash secured put. These are the basics. These are the two things that you, if you want to trade stocks, this is the basic. And the good thing with that one is that, say you are cash securing put, you are really intending to buy 100 shares of that stock, you really want it, you can actually execute a cash secured put by putting that in the market. By putting it in the market, your intention of buying, say donut for $5, you are actually wanted to own a donut on a price of 450 or $4. So you have an intention to own the donut or to get the donut by buying. However, you want to get it only, no matter what, at $4 or $4.50. So it's either it could be assigned to you. When I say assigned, you could own it or not at all. If you are not able to own it or get the donut at 450, you are getting paid. Does it make sense? Is it not beautiful? It's beautiful. By just putting up your intention to buy in the market or in Robinhood, you are already getting paid. That's what we call credit, and that's what we call cash secured put, CSP. We got it? So you own the. However, if you own the stocks, if you're able to own the stocks, you are assigned with stocks. You are also getting the credit. You will still get the credit. Isn't that fun? You get the credit. You get the credit, so that will be your discount. So for the price of donut, for a $5 price of donut, you end up buying it for like 440. It's still a win-win. It's a win-win situation. This is the very best strategy of owning a stock, not just like buying it in the market. Use cash secured put instead of buying in the market. CSP. I'll just call it CSP. Buy it in CSP. If you are really intending to own like 100 shares of what? SoFi? SoFi is good. Oh, the only thing with SoFi, it doesn't give dividends. BS. Right? Ford is better. I mean, that's a financial advice. I don't, but these two things are actually good. Like for trading, for small capital trading, if you don't have that capital yet, because you will be assigned 100 shares. You will be assigned no matter what. This is the contract. One contract is 100 shares. So you have to own or sell, buy or sell 100 shares of that to get a single contract. And what I'm doing right now, currently earlier today, is I am doing 3, 2, and 1 contract of XSP or S&P 500 or SPY, which is how much right now? It's 740. So that's, can you imagine how much money was that? Right? Like 100 shares of that for 745. That's a lot. That's already like 70 grand plus. That's a lot of money. So you don't want to do that for now, but for the beginners, like if you really want to learn more about options trading, hit the like button. Oh, promoting. Well, of course, that's no brainer. So yeah, again, on the other hand, say let's just say the donut. If you want to sell your donut, I mean you already make the donut and the cost of the donut you bought donut. You bought it in the market for at a limit price. Say you are assigned of that donut at 450, $4.50, and you are intending to sell it this time with the intention to sell it, and we call that covered call, long call. It's a bullish trend. You are intending to sell it This time you have the intention and you want to have it executed, but by putting a long call of selling it at a $5 strike, $5 strike, you will get double the money. You will get two, not double the money, but you will get a double whammy. Like, what is a double whammy? When I don't know how they call that but it's a very common one. You get the value, the difference of from how much you bought it, 50 cents. Say you bought it for 450 and you sold it for $5, like covered call, putting a call position, covered call, then you will get the 50 cents times 100 profit. That's profit plus the credit. The credit that you are getting paid, that credit is getting paid while putting your intention in the market, in the air. In the air. So that's what called love is in the air. Na 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 na. No, actually, it's money in the air. All right. So that is long call and cash secured put. When you do the two together, and here's the beauty. This is what many beginner traders are making a ton of money by doing cash secured put, and then once assigned, do a long call. Did you get it? Did you get it, guys? Cash secured put. If it imagine if you're doing CSP or cash secured put, if it is not assigned to you, you make money. If it is assigned to you, good. I have no problem. You have no problem because you're really intending to sell it, to own it. Then you do a long call. You're intending to sell it at a crazy whatever price if there's an intention or not. So it's only up to you. If there's an intention for you to sell it at a higher price. If it is not going to be assigned, if it's not going to be to get sold, then you still have the credit plus the dividend of the stocks you own. So you will get three whammy for getting that. See, this is the beauty of it's not really as the same thing as what traditional trading. Anyway, I have meeting at 8:30 today. The time is 7:54 in the morning, and let me see what is on right now. I'm still in the money. It's not a good news. I hate that. Three Iron Condors with in the money. No good. No good. But anyhow, let us just that's the way it is. Let's trade. Let's me go to the options. So just look at there and one of the magic thing. What magic thing? Not a magic. So this is the single leg, and then later on, as you move up on the tier, you can actually do vertical spreads. And the vertical spreads this time has two legs. You're putting up a cash secured put, like say for example, the most common here for the bullish, like put credit spread or bull put spread. They call it bull put spread. Some call it put credit spread, meaning to say you are only getting when you do put, you're getting credits. When you do call, you're getting to pay a debit. You will pay the contract. So which one are you going to do? Well, some people would prefer doing it buying the contract or paying for the contract. I don't. I do. I do get credits from the contract. So this is from these two. Oops. This one. Long call and cash CSP. Long call is also known as covered call. Cash secured put is just simply cash secured put, CSP. And for the vertical spreads, you can actually do this too. You are doing two things. You are doing one of the thing which I did earlier. I'm doing a put side only, or you can only do a call side only. So you will be making half of the condor. This is half of the condor. This is half of the condor. If we combine these two together, then you are making an iron condor. And that's when you go down here, straddles and triangles. I can actually explain to you what calendar spreads is or straddles and triangle. These are these are advanced trading strategy that you can employ by uh, employ so that you would have a defined, when I say defined, losses and profits, very defined. Unlike unlike the first one, not clearly defined, it's one direction. You will have an open profit or you could have a open loss. It's good if you are playing with a or using a very good stock, which I recommend, not a financial advice. Ford, SoFi, XSP. Um, XSP is very expensive, but the least expensive one are for me that I used is SoFi. I use that. I use Ford, and I like Ford because either though when I own the stocks or share of Ford, I get I get a dividends anyway at the end, so I can buy X number of stocks if I have, you know, for my for my stocks. So you can do that. Now, for this is advanced, and I would love to teach you this, especially for those. I mean, you don't need to be taught. I mean, if you're already a level three, you understand this. If you're a level three spreads trader with in Robinhood, meaning to say that you are trading with the volatility of the stocks. So there's a limit in the range. Once you are inside the range, then you would not make money. But when you're outside of the range at both ends, that's why you have this spreads, neutral, neutral, and volatile. The put short put calendar, you are getting credit for that one. The one in here, you're actually making credit for this one right over here. The one at the bottom, the short put calendar, the purple one, you are making credit for the volatility of the stock. So it is really great for those stocks that are jumpy or bouncy. Okay. For the neutral stocks, you want a boring one. The long call calendar and the long put calendar. Put is a calendar is more on credit. You can actually make money out of its being boring. So boring stocks are actually good stocks for um trading. I'd say I don't know. SoFi is boring. Not really. Ford is boring, but if you want to do the first one here, and if you want a single leg, try to research for stocks that are, we call it boring, because the more boring the stock is, the better chance of you making credit for that one for just doing so. Okay, that is um spread trading, guys, and this is really advanced. I mean, it's not the traditional buy and sell, limit buy, limit sell in the market. The common one when you do say trade with MetaTrader, Ninja, or Ninja Trader, Trader, Taste Trade is good. It's also for spread trading. So this trading is called spread trading. This is actually what makes your stock go up and down. This is the reason, the very main reason why. Because there are brokers, say for example JPY or JPI or JEPQ. If you look at, let's try to look for the stocks. Um, look for JEPQ. How did JEPQ make money? Just JEPQ. JEPQ is trading at 58 right now. Yeah, yeah. So they're actually doing well, how do you make money? Manage using ESG factors and proprietary data, science driven investment, listed name, income ETF, also fund invest in ELNs. Okay. Um, some were actually like JIPI maybe. if we look at G pi, G pi, G point, G point, G pi. Oh yeah, look at this. Index, it seeks to provide similar returns as S&P 500 with a lower volatility and monthly income. Let's say JPI. They are actually playing. They're actually using. Um, they probably would the brokers here or the managers of this ETF could be using. I mean, for me, I would say definitely are using calendar spread for this one. It is very obvious, I can tell. So they're making that is how you get your premium from this, and this is also the reason why you you are making income from doing this. Let me just try to look at SPYD as because SPYD is actually this one giving you a day. I don't know if it is daily dividend, but yes, tracks index 80 highest yielding stocks and show more. And yes, I can tell that they are doing that too as well. But anyway, these ETF are for me no brainer to own. SCHD is again SCHD. If you have good money, you can actually put a CSP on this one. All right. So what CSP is, you can buy instead of like buying at $32. That's 100 of that is like um, 3,200 already for 100. But you can actually buy it at a lower price for the day at 3,100 for 100 shares. You can. You can by putting a CSP or cash secured put for that one with the intention to own it. Okay. So you have the intention to own it at the same time when you get when you really want to own it. So why not do it? Why not doing CSP and then at the same time if he doesn't get executed or if that gets assigned, you're also making credit, meaning you already have your dividend without even owning it yet. Is it not? Is it not uh, great? Right? It's fun. It's fun. So you might end up owning the stocks for only a lower price of $31 or $30. What if? Like, look at the market. Look at the volatility of the market. You might have the chance of getting it owned. If it goes $30, then boom, you own 100 shares of that one. Then you can do a covered call after that one. Easy, easy, easy pansy. So for owning SCHD and SCHD, a lot of people just simply buy it in the market. They just like trade and then go buy, and that's it. And how many shares? 100 of that one, and that's 3,280. You can get a discount. You can get a discount by doing what? CSP. And some people just simply do limit they want to buy and number of shares 100 and they want a market price lower limit the market price to 31. For me, I would rather do this. Like if you have that, you go options trading and you go long call for that one and buy it for this one. See, the current price 32,700, you can buy it at 32. Boom. And then buy. What happened? And one contract, you get $90. If you are not able to own it, say I'm going to buy a contract and in review, you have to have X amount of that money, 3,200. Switch up the account, individual bet. I don't want it to. Okay. All right, guys. That's it. That's all for today. And thank you so much, you guys, for being here and watching my live today. And I hope you learned something. And let's go in depth with this one for this trade. And thank you so much. And if you like my video, I always do this in the morning because that's nope. Again, that's the trading time from 6:30 Pacific time here in California. From 6:30, I was starting doing my analysis at 6:30, and I'll start my trade at about 6:50 or 7 in the morning. And that's it for today. I mean, I at the end of the, I mean, at 10 p.m., at 10 a.m. In the morning, I close everything, whatever, lose or win, that's it. Thank you, and you all have a great day. God bless you all. Thank you for watching, and see you again the next day.